Most veterans retire with a steady pension and then watch it disappear month by month, bill by bill, until there's nothing left to pass on. That's not a money problem, that's a knowledge problem. And today, we're fixing it. Subscribe to Realogic Finance. We break down wealth strategies built for veterans by veterans. You served for decades. You followed orders, met deadlines, and sacrificed things most people will never understand. And when that final day came, you walked away with something most Americans will never have: a guaranteed monthly income for life, a military pension. That's not small, that's a foundation. But here's the brutal truth that nobody tells you at the retirement ceremony. A foundation is not a house, and a pension by itself will not build generational wealth. Generational wealth means your children don't start from zero. It means your grandchildren inherit assets, not debt. It means the sacrifices you made in uniform translate into something that outlives you by decades. That kind of wealth doesn't happen by accident. It happens because someone in the family learned how money actually works and then acted on it. That someone can be you. Let's start with the pension itself. The average military pension pays somewhere between $1,800 and $4,000 a month, depending on your rank and years of service. For most veterans, that covers the basics: housing, food, utilities, maybe a car payment. But covering the basics is not building wealth. Covering the basics is survival. Wealth is what happens with the money left over after survival and how aggressively you put that money to work. The first shift in thinking is this: your pension is not income to spend. It's a base that frees you to invest. Because you don't need to pull from investments to eat, you have something rare in the investing world: patience. You can let money sit and compound without panic. That is an enormous structural advantage most civilian investors simply don't have. Now let's talk about where that money goes. The most accessible starting point for most veterans is the Thrift Savings Plan, the TSP. If you're still contributing or rolled it over after retirement, you already have a tax-advantaged account working in your favor. The C Fund inside TSP tracks the S&P 500. Over any 30-year period in modern history, the S&P 500 has produced an average annual return of roughly 10%. That means money invested consistently in a broad index fund will double approximately every 7 years. A veteran who retires at 45 and invests $2,000 a month into index funds will have, by conservative estimates, over $1.2 million by age 65. That's not a fantasy, that's arithmetic. The math works. Most veterans just never saw it laid out this way. But index funds alone are not generational wealth. Index funds are a wealth preservation and growth tool. Generational wealth requires assets that can be transferred, things your heirs can receive, hold, and continue building from. That brings us to real estate. Real estate is the single most proven vehicle for intergenerational wealth transfer in American history, and veterans have one of the most powerful tools in the entire housing market sitting right in their back pocket. The VA home loan: no down payment, no private mortgage insurance, competitive interest rates, and it can be used more than once. Most veterans use the VA loan once, buy a home to live in, and stop there. But financially sophisticated veterans use it differently. They buy a primary residence with the VA loan, build equity over several years, then convert that property into a rental and use the loan benefit again on the next home. Over time, this creates a portfolio of cash-flowing properties that generate income independent of the pension. When you pass those properties to your children, they inherit not just a building, they inherit a monthly income stream. That is generational wealth in its purest form. Now let's talk about something most financial advisors skip when speaking to veterans: life insurance as a wealth transfer tool, not term life, whole life, or index universal life insurance. These policies, when structured correctly, accumulate cash value tax-deferred over time. You can borrow against that cash value while alive for business opportunities, real estate down payments, emergencies, and when you pass, the death benefit transfers to your beneficiaries completely income tax-free. A veteran in good health at retirement age can often secure a policy that will deliver 4 to 10 times the premium paid back to heirs upon death. That's leverage. That's the kind of tool that converts a pension into a legacy. There's another piece that gets overlooked almost entirely: the business. Veterans are statistically among the most successful small business owners in the country. Discipline, leadership under pressure, logistics management, team cohesion. These are not soft skills. These are operational competencies that translate directly into entrepreneurship. The Small Business Administration has specific loan programs for veteran-owned businesses. Many states have veteran business tax incentives. And a business, unlike a salary, is a transferable asset. You can pass a business to a child. You cannot pass a job. A veteran who builds even a modest service business pressure washing, property management, consulting, security services, and runs it for 10 years has created something with real market value. That business can be sold, gifted, or inherited. That is generational wealth. Now let's bring this together. Generational wealth is not built in one move. It's built in layers. Layer 1, protect and stabilize using the pension as your income floor. Layer 2, grow through consistent index fund investing inside tax-advantaged accounts. Layer 3, acquire real estate using the VA loan benefit strategically over time. Layer 4, transfer efficiently using properly structured life insurance. Layer 5, build a business that becomes an inheritable asset. Every single one of these layers is accessible to a military veteran. Not someday, right now, with the exact benefits and background you already have. The veterans who build generational wealth are not the ones who earned the most. They're the ones who learned the most after the uniform came off. Your service earned you the foundation. What you build on it is entirely up to you. And it starts with a single decision: to stop spending the pension and start deploying it.